Hello, Fred Ack here. Fred ACC, all one word. Alrighty, we're out by the pool. It is Tuesday. It is April the 8th, about 11:30 East Coast time. This one is titled Stock Market Profit. Why? Because Fred Ack is taking stock market profits. Well, I put mine in for the 4 o'clock close. For those of you who do subscribe, and I want to thank you all for being here, of course. I got to thank you all for being here, and I do appreciate you all stopping by. Knowledge is power, as I've said from the start of my postings. So if you look at my postings on Thursday, I had mentioned that the stock market is getting a bit oversold, like I did back in early March, maybe the 11th or the 12th, that there was a short-term buy in here. Very short-term, meaning one day. So on Friday, I had said Thursday, going into a Friday right before the weekend, the fear will be outpacing the greed. It'll probably be more of a sell-off. On Friday, I did post at 2 p.m. that I'm going in, buying for a very short-term trade of one day. It turned into 2 days because the markets were down some 1,600 points on Sunday evening, the futures. Markets opened. They were wavering up and down all day. A lot of education to learn. Well, actually a lot of knowledge. And the education comes with the profit or loss that you take in your investments. So, once again, this is not financial advice, just the ideas that are swirling around in Fred Ack's head. On Sunday, I could not have banged the table more. The fact that I'm in this to the upside, and once the greed steps in over the fear of getting out, the greed of the fear of missing out on the upside, we're going to run to the upside. So I didn't make a move yesterday. Today, I'm getting out the 4 o'clock close. Stock market is up about 1,000 points. It was up over 1,400 points earlier. That's the Dow. We're going to kind of regurgitate a little bit about yesterday. And why are you subscribing? Hopefully for the free education, the free knowledge. Knowledge is power. It's all free. The education you get, that may cost money. And I'm going to try to shorten your learning curve from not losing a lot of money. A lot to be derived from yesterday. It's a very interesting thing how I've mentioned this a number of times in the last 4 or 5 postings, that I've seen the movie many times and I know the ending to it. Stock market tends to be dangerous when it's 3 days down, 3 days up, or 4 days down, 4 days up. There's an axiom between the trading world. 3rd day down, be careful. 4th day down, be very careful, because the reversal starts to come into play. That's what we're getting today, on Tuesday, April the 8th. Alrighty, but just going to kind of redboard a little bit about yesterday. Some stuff to kind of learn from repetition. You see it over and over and over again. Best analogy I could give is, and I've done this in the past, I think, supposedly the Bruce Lee guy, whoever they are, used to say he was all that good with the karate, kung fu, whatever the heck it was that he was doing. So more than likely, if you walked up to him on a movie set and you went like that, he probably just instantly goes and blocks it. It's instinct from repetition over and over and over. You see these things over and over and over. So what happens yesterday? Okay, stock market on Monday had some tremendous sell downs last week. Good 4,500 points off the Dow. And everybody's, whoa, this is the end of the world. The boom and bust is how the big money makes money. They make money off the little people by getting you coming and going. And they control the narrative. I have numerous posts out there today. There's going to be one on XRP shortly. Not want to miss these postings, I don't think. But in one ear, out the other, garbage in, garbage out. If it makes any sense, you grasp some of it. Love all the comments. Any comments you might have, any questions you might have, ask away. I'll do the best that I can to try to respond. So, yesterday's action. Let's set the Wayback Machine, Mr. Peabody. Come on, Sherman, let's go take a look at yesterday. I don't have the chart up here in front of me. I'm just going by my somewhat weak memory. So the markets were looking like the futures, they would be down huge on Sunday night, 1,600 points. Monday morning, the markets open, they're down 1,200 points. Then there's this big rally. What's going on behind the scenes? Well, Thursday into Friday, you had a tremendous amount of people shorting. Then you got all the late shorters coming to the party on Monday morning. They're shorting the stock market, expecting it to go down a lot more. The big money knows this, so when they start to surge it back up, you got all the individual players who are short getting caught bad. It's called a short squeeze. If you're short 1,000 IBM or 300 Amazon or whatever amount of Tesla, 500 Teslas, and it's running against you, it's going up in price, and you're shorted looking for it to go down in price, you're getting clunked, you're hurting, you're losing money. The way to stop losing that money is to buy it back. So all of that excessive buying that comes in just gyrates the market up even more. If you look at that chart, it had a couple of huge waves back up towards even. I think they even went green on the day, positive on the day. Before noontime, made another run up again. And these waves tend to be overextended when you come off of the 3 down days you had last week with tremendous washouts going on. Sadly enough, there are so many individuals out there that are getting completely destroyed financially. They shorted the market, they're late to the party. The big money knows this, they get the herd moving in the other direction. Now all the individuals are clamoring to cover their trade. They're buying it, it's gyrating the markets up even higher. Now it starts to go towards green. So the individual that hasn't seen the movie many times is sitting there thinking, wow, we're going to have a big up day. Let me cover my short, let me buy and go long. And the next thing you know, it drops back down 350, 400 points, and they're getting gutted again. That's how the nature of the stock market is. And you got to start to learn the patterns and watch the different things that happen repetitively, because they tend to happen over and over and over. Looks like we're picking up some noise in the background. Alrighty, well, that's just my short version stock market profit. So all of the blabble that I gave, I'm getting out, moving to the sidelines. I'll make 1.5 percentage points, maybe 2 percentage points. I'm going to be hoping that into the 4 o'clock close, 3 o'clock, 3:15, 3:30, the greed factor, the fear of missing out, not the fear of getting out, the fear of missing out, the herd mentality. They all jump on board, rally this thing up 1,300, 1,400, 1,700 points. Fred Ack will move to the sidelines. What I've learned over time is that, look, you can have an automobile that's 10 years old. There's trouble with the engine. You're like, I got to sell this thing. So you clean up the inside of it, the windshield, the windows. It's nice. Doesn't change the fact that there's problems in that engine. There's problems in the economic engine. That's what Fred Ack sees. I'd rather just be on the sidelines, waiting for oversold opportunities. Not looking to go long. Not looking to short overbought opportunities either. But for those of you, I hope you subscribe. Hope you're learning a little something from all this. Please go back, look at the Thursday postings last week, the Friday postings, the Sunday postings. I could not have been stronger about what I am up to. About to post on XRP, picked up a little more of that. The greedy bastard that's in me. Yeah, I am who I am. Alrighty, well, I want to thank you all for being here. Hope all your days are winning ones.